Hello viewers, welcome back to my channel. I'm here with my ICT concept, and today's video I'm gonna talk about how to avoid the low probability trade and you can wait for the high probability one. I know everyone will teach you how to take entry, but in my opinion I have never seen someone is talking about how to avoid entry. So in this video you will know how to avoid the low probability to entry and you can wait for the high probability one. In this case, I would like to add, if you know which trade you should avoid and which trade you should get entry, then you will easily can lose, avoid so many losses. At the end of this video, you will learn how to avoid the losing trade. Yesterday, I have uploaded a video regarding this issue, but some of you actually commented below that video that you didn't get it clearly, and someone also messaged me. So I have decided to talk about this today morning as well. This is the morning session. After the morning session, actually it's 11:16 right now, New York local time. So after completing the morning session, I would like to share today's morning session's trade, and I will upload it at 7 p.m. New York local time. So if you have watched already, I have uploaded a short in my channel to the live execution of this entry. I have marked how it act over there. And if you didn't watch, no problem, I will discuss this entry and also discuss about here. There was an entry as well. I will discuss this two entry and you will learn how to actually avoiding this entry and you can take the very clear entry. So let's go to the chart. I will use the reply mode so that I can explain it in a better way, and I'm using it from 9:29. Here you will go step by step. Like, I have just opened my Nasdaq chart and this 1 minute chart. I don't know where the price is, where it will go. Though I have uploaded a video about today's daily bias in the morning before the AM session. But think you didn't know where the price will go. You don't have any bias. So how do you know where will price go? Right now price is over here. I will just see, is there any level behind it? For that you can go to the hourly chart because I'm using a very small monitor. So that will be very easier for me to go to the hourly chart. If I go to the hourly chart, I can see this is a low which is very near to the price right now. So I marked it as sell side liquidity. And again, I will go to the 1 minute chart. So when I came back to the 1 minute chart, what did I see? What do you see? Price came and tried to clear this sell side liquidity. Did it clear it? No, it didn't clear. At 8:30, it came and didn't clear the sell side liquidity. Then it started to go higher. Where it can go? Where could it go above this place? You can go to the 5 minute chart. There is nothing important actually. You can go to 15-minute chart. Well, in 15-minute chart, you can see there's a very nice fair value gap. There is no liquidity. You can say there's no relative equal high or some, normal high. There's nothing. But there is a very nice 15-minute fair value gap. You don't need to go, more higher time frame. You doesn't need to go over. You don't need to go. So let's go back to the 1 minute chart again. I have marked this as 15-minute fair value gap. And now let's see what price did. At 9:30, it started to go higher and went to the 15-minute fair value gap. Now, where it could go? Will it go higher or will it go lower? Did it finish its business below here? Did it clear the sell side liquidity? No, it didn't clear the sell side liquidity. So your first thinking is price came so far from here to here, or you can, if you go more back, you will see it came from so high to this level, but it didn't clear the sell side liquidity. It should have cleared the sell side liquidity if it would like to go higher, but it didn't do it. Then its first priority is to come back and clear the sell side liquidity. This should be your thinking. So you see what price do. It's trying to come lower. It tried to come lower, but it couldn't come low. In that case, if you see closely, when this candle happened, this candle actually occurred over here. There is a this candle's low and this candle's high. There's a very nice fair value gap. Obviously you won't go to the buy side. It's because it didn't finish its job over here, below here. It should have come here, close the sell side liquidity first, then if it wants to go higher it can go. When you have seen this nice fair value gap, some of you will think, okay, this is your market structure shift or something like here. It is your market structure shift, this is your fair value gap, you will take buy here and you will go up. No, this is not that fair value gap, because I am not expecting higher prices. Instead of that, I am expecting lower prices because it didn't clear the sell side liquidity. The same reason. So let's see what price did actually. It tried to go higher but couldn't break the 15-minute fair value gap, and then came back again to this gap. Please don't take any buy. It didn't complete its job over here. Wait. Okay, it tried again to go higher and then it breaks lower. You see, it breaks lower. It first time it breaks, then it started to go high, clear the buy side liquidity, then it breaks it again, went higher. You can see this is your market structure shift. This is your market structure shift, and in this candle when it came to this gap, you can take your short over there. Your target should be this sell side liquidity. See, when it went here and you took your short or you miss it, you can mark your order block. If you watched my video, I have done all of that in that video. So that is your order block. If you miss this entry, you can take your entry to the order block level, and then it cleared the sell side liquidity. So what happened here actually? It tried to go higher. From here it tried to go higher and traded the 15-minute fair value gap. Also it has cleared this buy side liquidity. You see this high and this high, they are relatively equal high in 1 minute chart. I'm talking about 1 minute chart as you don't know what is your bias. So you just came, open your 1 minute chart and you are doing this. It has cleared this buy side liquidity, traded this 15-minute fair value gap, because there is no clear fair value gap at 1 minute, 5 minute chart. But in 15-minute chart, there is very nice fair value gap. So that's why I marked it as from 15-minute chart. It tried to go higher, again, cleared the buy side liquidity, break lower, gave me the market structure shift. This is the inversion fair value gap. If you take this entry, your target should be sell side liquidity, because this is very obvious place, obvious level where price should go before going higher. In my opinion, this is not a high probable entry, because you see this, all of this choppiness over here, you don't know or you shouldn't know when you should take your entry. So why you will take this entry? Just avoid it. Let it go. Price will give you more precise, more beautiful setup. Then you can take your entry. Let's go actually what price did again. You see, when it has cleared the sell side liquidity, it was just you know just going up and down. If it would like to go lower, then I will get a very nice run. Whenever you will see price clear the buy side liquidity or sell side liquidity and then give you a very nice run, you will think that it has actually done its job over here to the upside, and it would like to go lower to do its to clean more sell side or something like that. Instead of that, what it is doing over here, you see, it's just going down, going up, uh, just going down, going up. It's doing it over here. So then there is very little run. This is not a energetic run. I need a run, one candle, it will go with energy, but this is not like that. You see, It's going down and going up. And I have got this candle. When I have seen this candle, let me go to the regular trading hour. Okay, if I go over there, uh, let me actually mark the opening gap. It is important. Every day you have to do it. You have to mark your opening gap. This is my opening gap. So electronic trading hour, I will just use my candle from here. Okay, so you see this is opening gap high, this is opening gap low, and here it has actually cleared the sell side liquidity, then gave me a very nice market structure shift. I'm going step by step, guys, so that you can understand how to wait for the better setup. Don't rush over here. You see, this is a very nice run. If you take your entry over here and your exit should be here, then you are so, you are profitable already, and it's a very big run. But you see the choppiness over here. Can you hold your price like that way? Price came, go up. Could you? Maybe you will trial your stop loss and you will be stopped out, something like that. But look at here, what it did. Just came, cleared the sell side liquidity, gave you a very nice market structure shift. I'll just clean this sell side level. Keep it in your mind that it has actually cleared the sell side liquidity. So when I've seen this market structure shift, and I wait for the next candle actually, and the very next candle, I marked two level. This is my first level, which I marked as it won't actually filled totally. So I marked it. It will stay unfilled. This is my breakaway gap, and there is your fair value gap. What I teach you guys, uh, actually I didn't teach you anything. I'm just talking like what I told you about. If you see two fair value gap, write it down to the comment box. I won't tell you. Trust me, guys. I won't tell you. I'm just kidding. I told you that if you see after cleaning the sell side liquidity, if you see two gap, one placed above another, you will think the lower gap will act as a breakaway gap and price will actually trade the higher fair value gap. So your stop loss should have placed below the consequent encroachment of the lower gap. But as you see, this is a very small gap, so I put my stop loss below the whole gap. I didn't actually mark the, what can I say, the consequent encroachment of the lower gap. I put my stop loss over here. In the meantime, when I have seen this big run, some of you can think, okay, price actually won't give you any chance to take entry over here. So you will take your entry here and maybe you will put your stop loss over there. Don't do it. Don't chase the price. Price is going up actually to retest this order block. You see here. When price was there, and please watch my short I uploaded to my video to my YouTube channel. I marked this like that way, that it will retest the order block, then it will come here and then it will go over there. I just marked it when this candle appeared. So let's see what price did actually. See, this is your entry. When it has just tapped to the upper level of this fair value gap, you are already in the market. So your entry should be here. Your stop loss can over there, and your target here. Yeah, you can target the opening gap low. You can target it because this is more obvious place. This is the more obvious place price should go. But I actually put my target here. It's because this is the 15-minute fair value gap and this is not balanced. This is not balanced yet. So I was thinking that price will go to this fair value gap again, and then if it would like to go higher or lower, that's another matter. I didn't want to think about that. Right that moment I was thinking it will go over there. And if you are a really fan of risk reward ratio, it's near about 3.55 is to 1. So it's very nice risk reward ratio. Let's see what price did. So price came lower. See, it started to go higher. And when I have seen this I fair value gap, I'm sorry guys, I forgot to tell you about that. Before this last bull candle, when I have seen this I fair value gap, I marked it as I fair value gap. This is your I fair value gap. Also, I have marked the consequent encroachment of that I fair value gap. This is very important, guys. If price really would like to go higher, then it has to actually react the consequent encroachment of the last I fair value gap or the fair value gap. This is very important, guys. Keep it in, remember it. It has actually came to the consequent encroachment, then it started to go higher. And then you see, boom. That was my exit. So now just tell me which one is most probable entry. Should you take the entry from here for targeting this sell side, or you should wait for this entry? Which one is more cleaner? In my opinion, you should wait for this high probability entry rather than this one. There is so much choppiness. You see, price go up, down, and you can easily, get stopped out over here. But if you just avoid this entry and wait for this entry, it has cleaned the sell side liquidity, gave you the very nice market structure shift. There is your fair value gap. That is your entry. That is your exit. Is it simple or is it hard? I'm just trying to make your life easier, guys. I think it's clear. This way, I decide which entry I should take and which entry I should have, avoid. I saw this entry. Trust me, guys. By swear of Allah, I told you, I knew that price will come here and it will clean the sell side liquidity, but I didn't take this entry. I took this entry to my funded account and as well as here to the paper account so that I can share with you guys. I didn't take this entry. I marked every level before price printing over here. I marked every level, but in my opinion this is low probability. You shouldn't go for this one, you should go for this. So this is the morning session actually, guys, and I'm waiting for the PM session. If you have watched my daily wise video, I have uploaded today's morning just before the AM session. I told you that I want to see the you know it won't go below this sell side liquidity. But if it go sorry, if it go below the sell side liquidity, it will go for with a shallow run like this. I was expecting this type of shallow run so that I can mark this as a relative equal low for tomorrow. Today I was expecting actually the higher prices. I want that price should go high and it will trade higher today. I don't want to trade it lower. If you didn't watch my video, and I mean the daily basis video, please watch it and then come back to this video so that you will learn why this entry was more probable for me, as my bias was bullish. So I took that on with all of the you know example I told you already. I described you with you guys. So I think that will be insightful to you. If you love this video or if you think this is useful for you, give me a thumbs up and share my videos link to new people. If you are new, then subscribe to my channel. That will be a very great help for me. So take care. See you. Bye bye.